All right. So, David, a lot going on the market. There are some developments today. I don't know if you are able to speak on those, but first, let's speak about the Jamaica Stock Exchange now falling to one of the worst performing stock markets in the world. What happened?
No, the reality is that, persons, have felt the effect of inflation and, rising interest rates. So if you've spoken to, let us say, someone who has a car loan, you know, their bank probably has increased the monthly payment on that. So that's an extra $10,000, for example, that, has to go back towards paying a loan versus being as disposable income to potentially invest in the stock market. And, let's say you have a mortgage. Some person's most recent mortgage rate increase is like probably $20,000 extra per month. And you've seen increase in the rate or the premium charged by general insurance companies and property insurance. And some liquidity is coming down in the market. So if you look at, for example, let's just say dollar yesterday, probably saw like 10, 20 orders max for dollar. When, probably just a couple months ago, you'd have seen hundreds of orders for the same stock. So, some persons are shifting their positions, to let us say a TJH or another stock. But otherwise speaking, there's a serious retrenchment, happening in the market, going back as far as 2018 levels. So, we saw yesterday where NCB Financial traded at $67. We've seen, even today we're 84 cultures at $1.50. And you're just seeing, persons, some of them rebalancing their portfolios, others having to make the hard choice of, selling some stocks to cover some bills. Because as you look at the actual data from the Jamaica Stock Exchange, the value traded is coming down. And value traded is coming down. It means that the spread that you can potentially earn on, some stocks or stocks in general is even smaller. So sometimes, probably in 2019, for example, the opportunity for you to make an example, let us say 10% on any given day was pretty high. Now that same, opportunity is relatively low. So you're only seeing stock prices or opportunity occurring like largely in the end of quarter, end of month. But otherwise speaking, the market is just really feeling the impact of high interest rates. Because you see persons say, hey, there's no IPO for the rest of the months of the year, but there are probably 7 or probably like 3 years plus where there are no new company listed on JSE pre 2010. So right now we're just kind of seeing investors some rebalance, and take advantage of the higher interest rates. So you have bonds and other instruments giving you 7, 10%. So even last week with the Bank of Jamaica's $22 billion, 7.5% certificate deposit for 2 years, the average yield was 9.99%, not 9.99, but over 9%. And you saw the highest bid yield, a successful one, being 13.99%. So you're seeing a lot more persons chasing, these higher rates that are relatively a lot more stable and relatively more attractive considering the risk. Because while, Jamar mentioned that Scotia, is paying consistent dividends, in the prior quarter, which should have been their first quarter, they actually cut the dividend to 25 cents. And that would have been a function of Basel III. And you're seeing, where NCB Financial Group has, not paid in dividends since May 2021. And the dividend payments from the financial companies, which would have been what you'd call the bread or staple of, any typical investor's dividend portfolio, has had to wither or, dry up a little bit more. So you saw JMB groups keep a dividend, Premium groups keep a dividend, so investors are looking for stability because you have persons who actually rely on dividend payments or interest income or whatever cash flow to pay their bills to just survive. So that's kind of just what's happening right now in the environment.
But aren't those conditions not unique to Jamaica? So we're seeing high interest rates, high inflation all over the world. Why is it that it seems Jamaica is having this extreme result whereby we've fallen to one of the worst performing in the world when these same conditions apply elsewhere?
Multiple factors. So one thing we should remember keenly in Kalila, most of Jamaica does not invest directly on our stock market. So if you were to actually go and check the Jamaica Central Securities Depository and ask how many unique accounts there are, meaning not John Brown having 4 accounts, but how many John Browns are there actually on record? It probably isn't even 10% of the population. And you have persons who would have, had certificates that haven't been dematerialized as yet. So the investing population is still relatively growing, and you have persons who just, have said, I can't bother. Price is coming down, and you probably go to the advisor, and the advisor says, just stuff it out, probably find something else. So yeah, that's just one factor. Like you have investor apathy, just getting a little bit higher. And as I pointed out, a lot of persons, who would have invested back then, and also like your institutional investors, they've just shifted their portfolio allocation towards fixed income in this environment. Before we had, the NDX and JDX environment, the JSC didn't see as much capital in its direction. It was really directed towards fixed income, those 17% treasury bill days and so forth. Another factor is, right now where we're seeing the SSL clients, they actually are locked out of the market. SL wouldn't have been a big broker from, a grand scheme of things. However, those clients cannot sell their securities, cannot access their cash, and, those accounts are basically out in the market. That's another factor to consider as well. And,
Not only that, it had a huge effect on investor confidence. It had an effect on, new listings coming to the market. You heard what Kevin said earlier. It's not a great time right now. So even though, you have your people who are directly affected, who are customers and clients of SSL, but it had a much, much bigger impact than that.
Yeah, and something else I wanted to point out was that when you're seeing like other markets and what makes Jamaica so unique, our market is still developing. As I pointed out, the number of accounts and everything, because in the context of the US market, for example, which rallied today after the CPI news came out, that has a global participation. You have persons here in Jamaica, probably from as far as Asia, Europe, wherever we're investing in the US markets. That's not the same case for our local markets here in Jamaica. Even when you look at, let us say, some of the returns on the unit trust and mutual funds, a lot of the equity are down double digits year to date. And if persons are buying in some of these unit trusts, the fund managers probably might be taking a more reclusive approach and holding cash, looking to buy up these that they find appropriate, rather than just throwing cash at the market just because something is cheap. So it's a very dynamic situation. It's not necessarily just static, but one thing Keely mentioned a while ago, investor confidence has been shaken definitely over these last couple of months. SSL, you've seen the Silicon Valley Bank situation up there, so it's just a lot going on.
Yeah. So we have a bit of breaking news coming out this evening. You actually tweeted it earlier today, David. Can you tell us what's going on? I saw, let me see if I can find what it was. So where is it? All right. So there's a broker who is in capital deficit. Explain what that means, and should we be worried?
Give me a second. So to keep that very simple, the JSE has rules like any other exchange. And some of these rules actually require brokers to have what you'd call excess net free capital. So there's a calculation. The JSE says you take these assets and all these other factors, subtract liabilities, and you add in another factor or calculation. And after you do all of that, you get something called the excess net free capital. So what happens is that if you actually go below zero, which you're putting in a deficit, the JSE says, hey, you actually need to, correct this. And what is supposed to happen is that you have to give the JSE, in this case, the managing director, which is Marlene Street Forest or Andre Tulloch, an update to say, hey, this is our plan to actually correct this issue. And if you don't give a reasonable explanation or, sometimes a correction within 30 days, you are supposed to be suspended from trading. However, that has not always been the case, because last year one broker was actually in capital breach of 2022. I don't know which broker that specifically was, but the JSE just terminated SSL recently, and for another broker to be in capital deficit now is pretty concerning, because while a broker can be capital deficit on the JSE side and be in compliance on the FSC side from the capital adequacy standpoint, it is still a big problem because while it's easy to maintain deficit on the JSE side from the capital standpoint, it still shows that the broker has some sort of gap that is emerging with respect to its capital related to its liabilities, and it's a relatively serious concern because if the JSE was to get serious and consider suspending this broker, it would have significant implications for the clients in turn because right now we're seeing that call it what 3 months on right now, SSL clients they're restricted there at the JCSD, bonds and everything, and had other custodians, but they can't access it, they can't trade it. So this is kind of why it's so serious. And while this would have been for March 2023, we don't know, which broker was actually in breach, and that's pretty scary because
Why haven't they
brokers,
told us?
the JC didn't tell anybody, Kalila, and that's kind of the scary part because
So how you find
that
out?
call Nigel. Because I'm serious, like the JSE will not tell you, and the thing is, the FSC
No, I'm
is
saying,
something
how did
similar with
you find
SSL.
out that there is a broker in capital deficit?
But can you look at SSL when they had the commerce and everything? Like the FSC said, that they prefer to work with remediating with the broker than taking drastic actions which could potentially lead to their downfall. So that's kind of the situation we have in Jamaica, whereby the regulators want to take an approach of try to meet the situation quietly rather than allow the clients to be aware of what's going on. And while Dr. Clark said, hey, we are going to make the security dealers be required to publish their financial statements and material events to JSE standards, you have brokers which are just reporting their capital adequacy now following SSL in their quarterly reports. So right now, clients have to be concerned because realistically speaking, there's nothing that requires a broker to tell if they're actually in trouble until something does hit the fan, and it's not cake.
Oh boy, like we
So
haven't
like you
learned
see why
anything
it's
from
serious, Kalila.
SSL.
You see why it's so serious because so really you had 15 brokers before SSL. SSL was taken off like in February, so it's not SSL that is in breach right now. So that's a whole nother headache, and persons are relatively concerned because we'd have had a situation recently, the Mimir breach, and to see now that a broker would have been breached recently is kind of concerning because some brokers are actually having layoffs right now and cutting back, on staff and consolidating operations because Kalila, when the JS have in its heyday and all these trades and everything going on, the brokers would make money on every transaction. So if a client sells, let's just say NCB, to another client in the same broker that, but with, sorry, let's just say a client sells NCB to another client in the same brokerage firm, it makes either 0.5 or 2% on each share transaction. But now with all the trading values coming down, earning a lot less, on the income side. And for some brokers, the deal flow has also slowed down. And unit trusts and other managed products, some persons are choosing instead to look to fixed income. So to see some brokers going to capital deficit or falling further on the ladder of excess net free capital is really a concerning matter because, as I pointed out, the JSE and the regulator don't tell you when things are happening, so you're really left to guess who is the odd one out, and by the time you probably find out, it's probably too late. So it's really a pretty concerning situation.
So that announcement by Nigel Clark back in, I think, February, when he said that one of the things that they're going to change is that the brokers are going to be, as he mentioned, required to submit their financial statements, make them public. That hasn't come into effect.
It won't come into effect until the regulations take effect probably till next year. So realistically speaking, you're just basically on the fringes of God's hem right now because you just don't know. All these changes are being proposed, majority of them are going to take place into next year. So hopefully, rates don't go any higher and nobody goes under more pressure because I'm pretty sure we don't want to have broker failing here in this kind of environment at the moment. because the banks themselves are also under pressure, which will kind of constrain their ability to support these securities dealers if they're part of a financial group. And if they're not part of a financial group, that's an even more serious problem because everybody's kind of strapped right now. So to get capital to actually support, some of these brokers, would still be, relatively limited. So let me give an example. So last year, BM Business Limited, they injected $900 million into VM Wealth during the year. I mean, it was because of the potential concern that, with all these fair value losses and so forth, that it impacted the capital. Giant fund managers did something similar. I saw some brokers doing that. But right now, with all of this, relatively declining markets and reduced business flow, it's not as easy to just say, hey, I'm going to give you some capital to shore up your books. And on the same breath, there are different changes happening every second in if securities and even financial sector.
Oh boy. Before we go, Jamar, do you want to weigh in on that last topic there? How concerned should we be?
I think David has covered most of the salient points already, so I'll just wait to see what news comes out and take it from there. I don't think we should speculate too much on it until we see exactly what's happening.
All right. Thanks, Jamar. Thanks, David.